Let's talk about S Corporation quarterly taxes, okay? Here are the mistakes you should avoid if you have an S Corporation and you are required to file quarterly taxes. So here's an overview I want you to pay attention to. So let's first define what quarterly taxes are. So quarterly taxes, officially called estimated taxes by the IRS, are the quarterly prepayments of your tax bill. Very, very simple. So generally, when you get a paycheck, you will see the gross amount you've earned, then see adjustments for things like insurance premiums, retirement contributions, union dues, and state and federal tax withholding, right? So what happens here is that your employer basically withholds a portion of your paycheck and sends it to the government to cover your income taxes. When I say the government, I'm talking about the federal tax, the federal like the IRS, but also your state tax agencies. So for most people, this is sufficient to cover the taxes that they will owe at year end. But if you have income outside your regular paycheck that is not subject to withholding, like your pass-through business profit or investment income, you must pay federal income tax on that income through quarterly estimated tax payments. So who has to pay those quarterly taxes? Well, not everyone has to pay estimated taxes, but they are important for those who are self-employed, freelancers, or have a side gig that doesn't withhold taxes. So if you actually have self-employment income or other income sources that are not subject to withholding, you will probably need to pay estimated taxes. So for an S Corporation owner specifically, estimated taxes cover the tax due on the remaining business profits or the portion of your business income that is not your salary. So the IRS guidance says that you must pay estimated taxes if you're a shareholder in an S Corporation, a sole proprietorship, or a part of a partnership and will owe $1,000 or more come tax time. So $1,000, this is kind of important. One thing I want to say here is that when we talk about S Corporation quarterly taxes, it's important to understand that we are speaking about mistakes to avoid with estimated tax payments. Okay, you have to always make sure that if you're making payments every quarter, you have to do the calculation, the estimation, if you will, to see if you will owe something like more than $1,000 come tax time. Okay, very, very, very important. So now $1,000. By the way, boss, welcome back to the show. It's really a pleasure to have you here. Make yourself comfortable. You are going to enjoy today's conversation. So let me give you the steps you need to really take to calculate and pay quarterly taxes. Again, it's very important to understand that we're talking about S Corporation quarterly taxes, the mistakes that you need to avoid with estimated tax payments, okay? So if you think you might have to pay quarterly taxes, it's essential to do the math and pay the proper amount. So if you wind up, as I said before, the magic number is $1,000. If you wind up owing $1,000 or more, when you file your income tax return, you may face penalties from the IRS. So here's how to calculate your quarterly taxes as an S Corporation. You want to estimate as an S Corporation shareholder. That's what I meant. And so basically, you want to estimate your taxable income. You want to determine your tax liability. So you can calculate this by multiplying your taxable income by your tax rate. So if you're around 25% or 30% or 35% or 38% for that matter, this is how you actually can estimate your tax liability. You want to add up the payments you have already made this year. And you want to subtract the payments you have already made from your estimated tax liability, okay? And so basically, quarterly taxes are the prepayment of the shareholder's tax liability. However, some states impose business level S Corporation tax, so be sure to consider your state's S Corp tax obligations, as you may have quarterly taxes due at the business level. Federally, you don't have to pay taxes on the S Corporation. You're paying taxes on your personal tax return. Now, let's talk about submitting quarterly taxes. So if you must make quarterly payments, you must actually pay by the 15th day of April, June, September, and January. And if the 15th is a holiday or a weekend, the tax due date is the next business day. To make quarterly tax payments, you can send a check by mail along with IRS Forms 1040 ES. So everything happens through 1040 ES. So mailing payments through a snail mail is an acceptable method to submit payments. However, be aware of the risk of mail and check fraud and potential delays through the mail system. So really think about those things. So as a faster and safer alternative, you can submit payments from a bank account on the IRS website or use a credit card to pay via IRS Direct Pay, though a fee may apply if you choose to use a card, okay? And you can also opt for the Electronic Federal Tax Payment System, the EFTPS, from the U.S. Department of Treasury. This system allows you to submit any taxes you owe the IRS. And if you live in a state that levies income taxes, be sure to check your state's Department of Revenue website to determine how and when to pay your state taxes. By the way, boss, I want to quickly remind you of today's topic. We are having a conversation about S Corporation quarterly taxes, mistakes to avoid with estimated tax payments. Let's talk about the potential penalties and how to avoid them. How do you actually make sure that you are not making mistakes at all? Okay, now the IRS requires certain taxpayers to make quarterly tax payments throughout the year as they earn their income. And so this ensures that the IRS collects tax payments during the year, similar to withholdings, instead of receiving a lump sum payments at the end of the year. Okay, and so you may incur penalties and interest on certain balances owed when you file your tax return. So a penalty will apply if you owe more than $1,000 and you paid less than 90% of the amount of tax you owed, or less than the full amount of the tax you owed in the previous tax year. So typically what happens here is that the penalty is equal to 5% of the underpayment amount, though it can reach as high as 25%. So the IRS also charges interest on underpayments based on market interest rates. So calculating your estimated tax bill correctly and submitting quarterly payments is the best way, really, when you think about it, to avoid any underpayment penalty. Okay, and so while it can be difficult to pinpoint your exact year-end income, keeping clean financial records and reassessing your income quarterly can help you calculate a more accurate estimate. So it's all about making sure that you are aware of all the possibilities that are there in terms of filing your S Corporation taxes. So if you have paid actually 90% of your annual taxes, or at least your prior year's tax balance, the IRS will not assess a penalty. So that said, it's always important to understand if you're an S Corporation shareholder, you want to actually have a reasonable estimation of your annual income. And because the bottom line here is that if they're charging you, if they're assessing fees and penalties based on underpayments or underreporting of your income, then you want to make sure that you have a better idea, a better estimation of your taxes and also of your income. But again, you simply have to look at your tax brackets. Now let's talk about, if you're trying to really avoid mistakes with estimated tax payments for S Corporation, and there are some strategies for actually mitigating those pitfalls, or strategies for effective management of quarterly taxes. First of all, keep clean records. This is really important. I'm not going to really emphasize that. I'm not going to overemphasize this. You want to keep clean records. It's really important because tax filers, especially S Corporation shareholders, need to maintain accurate and complete financial records to estimate their annual income. So effective bookkeeping will help you extrapolate data based on previous year's earnings and growth trends, then help you project numbers for your estimated tax payments so you can have a clear idea what's really happening here. And you want to capture deductions so you can deduct business expenses from your income, which basically, and this is a process that reduces your tax bill and provides tax benefits. So the whole idea here is that you have a better estimation of your quarterly taxes, of your annual taxes, and so on and so forth. And so the thing is, if you are going to manage your taxes properly, you want to budget for tax payments. Okay, you want to budget for your quarterly tax payments. You know when they're due each year, so you don't want to treat them like surprise bills every time they come up, right? So set some money aside each month to make your next quarterly tax payments. You want to basically change your, if you think that your tax payments are too much, you want to modify withholdings. For example, you can adjust the withholding on your paychecks to avoid to withhold a larger amount of money for income taxes. So that means that you are basically planning things ahead of time. So if you withhold enough, you can use this as a substitute for paying quarterly taxes. And the IRS even encourages this strategy, recommending adding extra withholding on your W-4. But the bottom line here is if you have an S corporation, you have quarterly taxes that are a little complicated, And depending upon your industry, you can always get professional help, right? You can use a CPA or service or a tax preparation service to help you with quarterly tax payments and ensure you file forms on time, okay? And use the IRS. You can actually make sure that you can see exactly what kind of situation you're in and file the tax forms that you need to really file. By the way, boss, I want to quickly remind you of today's topic. We are having a conversation about S Corporation quarterly taxes, mistakes to avoid with estimated tax payments. Let me give you a few pro tips here. You need to understand that the bottom line here is that if you want to actually avoid certain mistakes, you got to really pay attention to the things that lead to those mistakes in the first place. For example, underpaying estimated taxes, depositing employment taxes at the wrong time, filing late. Those are, and not even separating business and personal expenses. Those are mistakes that really can cost you dearly with estimated tax payments, okay? So when we talk about underpaying estimated taxes, well, you should actually make your estimated tax payments if you know you owe more than $1,000, right? This is already established. And so it's one of those things where you want to really be in a situation where you pay way more than way less. And what about depositing employment taxes? So, basically you are as a business owner with employees, you are expected to deposit taxes you withhold, plus the employer's share of those taxes. So, and you have to do this through electronic fund transfers, okay? And so if those taxes are not deposited correctly and on time, the business owner may be charged a penalty. So you may be charged a penalty. And also, you can also avoid certain mistakes by filing late, for instance. So just like individual returns, business tax returns must be filed in a timely manner. So to avoid late filing penalties, you should be, like all taxpayers, should be aware of all tax requirements for their type of business and the filing deadline. So if you're an S corporation, you know that you have to actually file everything by March 15th. I mean, that's the annual tax year. But when it comes to quarterly taxes, you have specific dates. So it's one of those things where you have to see what really works for you. Another mistake that a lot of shareholders do in terms of S corporation quarterly taxes is not separating business and personal expenses. So it can be really tempting, though. It can be tempting to use one credit card for all expenses, especially if the business is a sole proprietorship. But doing so can actually make it very hard to tell legitimate business expenses from personal ones. So this could cause errors when claiming deductions and become a problem if the taxpayer or their business is ever audited. Let me give you a clear decision here. So basically, when we talk about S corporation quarterly taxes, the mistake you need to avoid with estimated tax payments, you gotta be really sure about the dates. Okay, so you have April 15th, June 15th, September 15th, and January 15th. So here, those are the 4 dates for estimated quarterly taxes. And so you do not want to be in a situation where you're basically underpaying your taxes, right? Because there are penalties for that, and the penalty is not really that cheap either. And it's one of those things where you are going to be in a situation where you're constantly paying your taxes, but also paying way more. And it's one of those things where there are actually some cases where the estimated tax penalty does not apply. So the IRS will not assess a penalty for underpayment of estimated tax if certain exceptions apply. You may qualify for an exception to the penalty if you don't have a liability the prior year, you were a U.S. citizen or a resident alien the entire year, and your prior year covered 12 months. You may also qualify for the estimated tax safe harbor penalty exception. You may qualify for a waiver of the penalty if you had a reasonable cause for not making the payment. The underpayment was not due to willful neglect. So those are really important elements. And so basically, the thing is that if you experience an unforeseen, uncommon, or noteworthy event, such as, let's say, a casualty or disaster, you can actually qualify for a waiver. If you're retired at age 62 or older during the prior or current tax year, and you became disabled during the prior or current tax year. So you have a few cases where you were able to do the things you're supposed to do without paying too many penalties to the IRS. And so one thing I want to say here is that if you didn't pay your estimated taxes, you can get a refund. Yes, it is possible to have a refund if you didn't pay estimated taxes, but to get a refund, your tax credits and deductions should total way more than your income tax liability. So in order to make this possible, you need to have a combination of deductions and credits that reduce your tax liability to zero, one or more refundable credit to actually process the refunds. So when we talk about refundable credits, those include earned income credit, EIC. You have additional child tax credits. You also have American Opportunity Credit, and you have alternative minimum tax. So that's the credit also. Let me give you the strategy you need to really pay attention to here. So when we talk about the quarterly taxes for S Corporation, you need to really understand that it's important that if you are an S Corporation owner, or let's say you are a business owner and have other types of taxable income, such as, let's say, capital gains, you may need to qualify to pay quarterly. You may need to file quarterly taxes in order to avoid the penalty, right? So those penalties are really kind of steep. And it's one of those things where you have to be in a situation where you are basically covering yourself. It's all about covering yourself. So if you don't pay taxes, if you don't pay quarterly tax payments, you are going to have a problem, because the penalties and the fines will keep dropping. And it's one of those things where you will be the loser in the long run. Now, one thing for sure, and this is something that we've heard from many viewers in the past, the penalty is a complicated formula. And it's imposed on the amount of underpayment for the number of days it remains unpaid, starting with the first quarter's payment. So this is kind of important. But the bottom line here is, if you're an S Corporation shareholder and you're listening to me right now, you listen to me for the last 15 minutes or 20 minutes or 18 minutes, and you think that you might need help with S Corporation taxes, please let us know in our section. Please let us know in our inbox. Just send us an email. Or you can just send us a comment in the comment section below. Leave us a question, and we'll certainly get back to you. It's one of those things where you have good strategy to align with your tax preparation service and tax filing service, so you are able to reduce your S Corporation quarterly taxes. You're able to and doing so without actually endangering your relationship, if you will, with the IRS. So this is something to really think on a long-term basis, and how it really affects all corners of your business, how it affects also all the partnerships that you are approaching right now to make things happen. Thank you so much for your attention. I really appreciate it. In today's conversation, I spoke to you about S Corporation quarterly taxes, the mistakes you need to avoid here. So I gave you some information. So I give you the overview, the pro tips, the decision, and the strategy. Thank you so much. God bless you. I'll see you next time. Until then, remember, stay marvelous.